on Facebook, on YouTube, on Twitter, on the Collective Shift platform. Thank you all for joining me for this State of the Market report. I'm Nathan with CollectiveShift.io, and today we're going to talk pretty much about the state of the market. This is a bit of an impromptu live session, and we're going to kind of go around the grounds. For those not in Australia, around the grounds is when we go and check the scores of all the games going on. And here, let's go and check all the different statistics and metrics for the health of the market. Obviously, it's been a volatile couple of days, been very interesting from an observation standpoint, even though, all of our portfolios are taking a hit. So today we'll go around the grounds, we'll go and check out some major statistics and metrics related to the market, and we'll pretty much have a barometer to see what our opinion is compared to, price performance. I think a general theme from our research team and over at Collective Shift and myself personally is that prices within crypto for DeFi and NFTs grew faster than adoption. So the percentage price increases grew faster than the percentage increase for Web3 downloads, or excuse me, MetaMask downloads, Web3 wallet usage, DEX usage, and then NFT purchasing as well. So we've got a lot of people dabbling on the outskirts of Web3, but the prices, in my opinion, grew faster than adoption. And I think we're having a little bit of a reckoning at the moment. Before we go around the grounds and we check out all of the different statistics and metrics we want to today, quick reminder about the CollectiveShift.io platform. We've got a wonderful asset page here where we pull API information from CoinGecko and from OpenSea and looking at the biggest and best assets in crypto. That one's taken a slight minute to load. We've also got a really, really wonderful airdrop page that's brand new. This is a static page now that we update periodically in what we call foundational research, where these airdrop opportunities aren't changing for a while. We've had optimism. We're all over optimism. We've got Arbitrum coming up. We've got layer 2s coming up. We go through what are airdrops, blockchain airdrops. I need to update this optimism one, give the old tick of approval here. Wallets, bridges, DeFi, and even NFT and NFT collections. And this is just a small sample of, most NFT collections should be giving you an airdrop out there one day. So we have our airdrop page, we have our assets page. And then lastly, before we get into the market at large, we have 3 different portfolios we do. We do a early stage crypto opportunities portfolio, a long-term growth portfolio, and an NFT portfolio. This NFT portfolio is pretty rare. Not many research firms are doing an NFT portfolio. We're investing our own ETH over here at CollectiveShift.io, so pretty unique there, and it's doing decently well thanks to a few gems. Let's get, and there's our asset page, looking really, really, really clean. The best thing about the asset page, in my opinion, we've got our collective shift analysis down here, bullish and bearish for a lot of different assets. So we got about 50 assets there, and we're going to periodically continue to add more. And my goal is actually to create an NFT collection page that is similar to this, so we can have API pulled histories of NFT collections. So, more on that hopefully soon. Now, let's have a quick baseline of how the market's going. We're down from pretty much 39,000 late last week, down to 31,000. We touched 30,000 yesterday. This is all for Bitcoin. For Ethereum, we were up around 2,900. We're down to 2,300. I believe we got to 2,200 yesterday, down about 20% for the last 7 days. And yesterday we were down about, 10 to 12% for both Bitcoin and ETH. One of the major stories is Terra USD and the UST stablecoin, which we'll touch on today. It's down at 90 cents. The UST stablecoin should be pegged to $1, but unfortunately, we're down. So we're down to 90 cents. Yesterday, I think it went down to about 74 or 68 cents nearly. It was absolutely getting smashed. Yesterday's, pretty much activity of the day was watching the depegging of UST. And do we have people in the chat? We do. Oh, good. Hey, Anthony. Good to see you. Please let me know if you want to talk about something today. With this kind of an impromptu office hours for 30 minutes, and I want to talk about what you guys want to talk about today. So we'll move on from major assets. Let's have a look at the market cap from a linear standpoint. Makes a whole lot of sense from where we were in August of 2020. We were at about $400 million market cap. We rose from $400 million market cap all the way to $3 trillion in November, and since then we've had a the finding of an equilibrium and a regression in prices. Hey Don, great to see that you're a new sub. Thanks for coming. Yes, always the smaller channels. Today's a bit of an impromptu one, so we're kind of just going over the market. So the one key thing for me here that I told users over at Collective Shift about a couple of months ago, timing wasn't great for when I posted this, but from this analysis, or from my analysis, excuse me, Bitcoin itself, if we actually go back to the Bitcoin chart, Bitcoin's only spent, I think it's about 17 days in its history. We'll go to the 1-year chart. It's only spent about 17 days in between 20,000 and 30,000. Hey, Jack, good to see you. Or Jake. So if I go to the max chart, unfortunately, I will bring this in a bit. Hopefully this goes decently quickly. We were only between 20,000 for Bitcoin from December to January of 2021, or excuse me, December 2020 to January 2021. Then we didn't really touch 30 grand until one day in July 20th. And we've only been between 20 and 30 grand for BTC price, USD, so this is American dollars, for about 20 days in its history. So I think we may be spending a little bit of time between 20 and 30 grand, coming up. Moving on to NFTs. NFTs are bouncing back a little bit from our 7 days. Big controversy with Azuki, which we'll have a look at in just a second. But pretty much we're down about 40 to 50% in sales trading volume for the last 7 days for major NFT collections. Bored Ape, Mutant Ape, OK Bears over on Solana. Moonbirds are down 45%. They're all down 40 to 50%. Ethereum name service, their kind of run is over. The something token is something that we highlighted last week. Yes, last week was the something token for their pre-launch community. So take a look at the something token if you have it. Their volumes dropped off a little bit as well. This is just the last 24 hours. Let's check out the last 7 days. So we have certainly seen a bit of a regression in NFT prices, matching the market, matching the equity markets, which are down over this, the last 5 days, last couple of weeks, and also matching the DeFi markets as well. Unfortunately, it's not loading, so we will move on. Going back to DeFi and looking at total value locked, our total value lock statistics really kind of match price performance, since 2020. So very similarly, in late 2020, we really only had about 10 or 20 billion in total value locked. So back in 2020, we didn't have nearly as many participants as we do today. So just want to kind of get a baseline of how far we've really come. And I expect this same chart to happen to NFTs, to happen to metaverse assets once we get a better tracking of metaverse coins. We've gone from about 14, 20 billion, 10 to 20 billion in late 2020, all the way up to about 250 billion at the peak in December 2021. So we had a 10x increase in total value locked. We saw similar price performance where we saw BTC go from, 6 grand up to 69,000. We saw Ethereum go from, $500 up to $5,000 or 4,000. I think it was 4,300 or around there for the all-time high. So, similar to price performance, it looks like we needed a bit of a day of reckoning for total value locked as well. And we certainly have seen. I'm always shocked at how quickly the market reacts. It's kind of what causes what. Decrease in total value locked causes price decreases, or does price decreases cause decreases in total value locked? They're very much connected, but I'm always shocked at how fast the market can actually move their liquidity. If prices are down, you'll often check a protocol, you'll check a chain, or you'll check a DeFi application, and yes, they've lost millions in total value locked in the last 24 hours. They're often very, very correlated. So we're down 13% over the last 24 hours. Just a quick reminder of who dominates when it comes to total value locked. Curve Finance, at the heart of pretty much all of these algo stablecoin battles. Curve Finance is a stablecoin exchange. That's what they specialize in. And I believe their volume over this week has been really, really strong. So Curve Finance, they're probably the leader in the world at multi-chain finance. They've taken Curve and put it onto a lot of other blockchains. Lido is quietly snuck up to number 2 in total value locked, over 12 billion. Wow, that's a lot of ETH. Then we've got our traditional people of MakerDAO, Convex Finance, Aave, Anchor, which has gone down 50% in 1 month and actually 57% in 7 days. So we've had a big decrease in total value locked for Anchor over on the Terra blockchain. And then a lot of usual suspects like Uniswap, Compound, PancakeSwap. Now, if we quickly check the chains, I wonder if Terra had a massive decrease in total value locked. We did. So our 1-day change for total value locked for Terra was down 48%, while other blockchains, on a really, really rough day yesterday, are down about 6%. Or let's check out the 7 days. So while Terra is down 60% for the last 7 days in total value locked, other protocols are down about 20%. So you've got 14 for Ethereum, 20% for Avalanche, or 17, 11% for Solana. So while a lot of blockchains are, most blockchains are down except for pretty much Polygon, won't even mention Tron. They're down about 10 to 20%, while Terra is down 50 in terms of total value locked. Hey, Live Free or Roll Hard, good to see you. Good morning. Having a look at NFTGo, this one's a little bit misleading. We'll have a quick look at the market cap just over the last, let's say 30 days, because actually 3 months. Could be a little misleading, but we've had some great growth through April and into May, and then it doesn't even really show a decrease this week. It kind of does. We pretty much have had an all-time high in NFT market cap of about 19 billion, and that steadily dropped over in the early part of May down to still at 19. So not much of a dip there in terms of NFT market cap. This chart I expect to follow the DeFi Llama chart. So I expect this chart a couple of years. We've only really been tracking the market cap of NFTs since early 2021. And I expect it to really follow something like this. And I could see NFTs being in this first little pump right here. And then, throughout 2022, we take some time off. We let builders build. We go through a period of flat prices, but I do expect the market cap of NFTs to have another rally here, either late this year, or we might have to wait till next year. But this is something where, if we're really thinking longer term, the market cap for NFTs, whatever NFT goes, tracking right now, this might be a little low, but this is a good barometer. I expect this 19 billion for NFTs to be at 200, just like DeFi. So I expect that over the coming years. And if you're thinking about people with investment theses, I expect NFTs to be over a $200 billion market cap. So there's 180 million worth of value that you or I could invest in and help create, or create it ourselves as an entrepreneur. And I expect metaverse industry to do the same thing. I expect the metaverse industry to be over 200 billion. In this case, this is total value locked when it comes to DeFi. But if we just participate in NFTs and participate in the metaverse industries as they grow from, tens of billions to hundreds of billions, we can participate in that upside. So, while markets are down now, just know that there's a lot of room to grow. We know that these markets are going to get into the hundreds of billions. So let's invest and let's participate in that upside when we see, in 2 years, we'll be back on YouTube and this will be 200. So the other thing I wanted to point out yesterday, I don't have a tab open, but let me get open Dune Analytics really quickly. I did a video yesterday for some Collective Shift members, and I just wanted to touch on OpenSea. The best chart that I use is by Archen 8. I just wanted to kind of note that, we're having some really, really rough performance here in May, potentially the start of a major bull run. But what we have established is some consistent sales volume on OpenSea, on Ethereum. Since, what is that? August 2021. So about, 9 or 10 months now, we've had over 2 billion in monthly trading volume for OpenSea. So this just didn't happen in 2021. In 2021, we didn't have 9 or 10 months of consistent trading volume on Ethereum for NFTs. And now we do in 2022, thanks to 2021. So while prices are crashing, the silver lining here is that fundamentals are becoming more consistent or showing consistency is a better way to say it. So we've got about 2, 4, 6, 8, 9 months of consistency here for OpenSea Ethereum. They've also added Polygon. Polygon's doing decently since about August of last year, a lot smaller volume, but some consistency there. And then for those that have been following, we just added Solana to OpenSea. So you can purchase Solana NFTs on the OpenSea platform. And we're getting some decent amount of volume there, about 20 grand daily. Where's the monthly? We actually haven't done enough to do monthly yet. So still waiting on some sales volume on Solana. So, but just to know that we've got some consistent sales volume here for OpenSea, which is nice to see. The other one I wanted to check, DEXs. Walked through this one yesterday just to give myself a bit of a barometer, like where are we in the market? So we're here at the DEX metrics dashboard. Thank you, Haga ETC, who built this dashboard. And I'm seeing here on, I'm trying to find the monthly DEX volume. This is the one I like. Here on the left-hand side, we have monthly DEX volume by project. And this is a bit of a longer sample size, 2, 4, 6, 8, 10, 12, about a year to a year and a half of consistent DEX volume starting in February 2021, where we had over 50 billion. Wow, over 50 billion in monthly DEX volume. So again, we're showing consistencies with services within crypto, and that's NFT marketplaces and OpenSea, and decentralized exchanges with Uniswap and all of the other different DEXs that are out there. Big drama today related to Azuki. So switching gears here now, and we're talking about Azuki real quick. We had some Azuki drama yesterday. Yesterday, the Azuki founders pretty much came out and said that they were involved in 3 earlier projects before Azuki. And unfortunately, how you want to spin it, they can be called rugs. One was Tendies, one was Crypto Zunks, and the last one is slipping my mind. But here's some of the accusations that are going around for the Azuki team. If we quickly check top NFTs, wish OpenSea would load a bit faster. Good, there it is. We're down to below 9 ETH, or below 10 ETH, excuse me, for our Azuki. And then the beans have absolutely dropped off a cliff. So beans they're trading at about 1.3 ETH. They were trading about 4 or 5 ETH yesterday. So we've had massive decreases in the floor price of Azuki. Just on May 3rd, they were at 30 ETH. Wow. So we've gone in 7 days, we've gone from 30 ETH down to 10 for Azukis. And then also for the beans, I really like the beans. They're kind of cool. They look pretty good. They've gone down from 7 ETH on May 5th. So 5 days go down to 1.3. So understandable after we talk about what these allegations are. Now, the beans we just saw, looks like the beans metadata did leak 5 hours prior to reveal. There was quite a few purchases of those rare bean NFTs for over 100 grand, over 200 grand. So there was quite a bit of activity related to beans and those rare NFTs. A lot of people are underwater now for sure. The founder announced yesterday that they announced that they participated and built 3 projects. And then a lot of people came out and said, oh, you were the guys that rugged. So the founder rugged 3 projects, quote unquote. The founder collected royalties from said rugs. Founder wash traded 300 ETH on LooksRare from his rug projects. Additionally, during the rugging of Zunks, Crypto Zunks, he pretended to be a woman. And then also that Dev still holds the most rare funks in his wallet and owns the underlying contract. So rough times for the Azuki founder, and the price is showing. So we may have lost 2 blue chips here on Monday, because even if UST and Terra comes back to its peg and we get back to $1, has the trust in UST been lost forever? And there's a very good case to say that yes, we may have lost trust in UST forever. I'd be really surprised if we lost trust in the whole blockchain, but they may need to rebrand that stablecoin. So, and then have we lost a blue chip in Azuki, who has taken advantage of their members and led by a potentially shady founder? Oh, yes, and stock to flow. Who can't forget stock to flow? Hey, Anthony Wallace, how we doing? I think stock to flow looks really good. I know people didn't quite have the tower here that everybody wanted in late 2021. But to me, we've taken a step function exponentially up from 2017, and we're in a whole new rarefied atmosphere up here. So to me, stock to flow is looking pretty decent. I know there's a lot of increasingly more detractors from the stock to flow model, but I think it looks pretty good. But going back to Anthony's question, if the NFT market is likely to 10x plus plus as an entrepreneur, is there a good article covering the business models being used? Great question, Anthony, and I'm going to have a think about that, and I can share with you in the Discord. There are, and one that comes to mind is by a man named Peter Pan. And yes, here we go. To answer your question, Anthony, probably one of the better articles that I've seen on, the changing of business models thanks to NFT collections. Because what you're alluding to, in my opinion, is covering the business models being used, and I think that's a great way to phrase it. NFT collections are changing how business models are perceived. Instead of raising a Series Seed, a Series A from venture capitalists, or raising a convertible note, or a SAFE, a simple agreement for future equity, younger entrepreneurs are simply releasing an NFT collection, and they're saying, great, purchase our NFTs. The founders don't get diluted from equity. They still hold, quite a bit of the ownership of their projects, so especially the intellectual property. So I think that's a great way to phrase it, is that how the business model has changed. And I think, a lot of NFT collections is simply now in lieu of raising a Series Seed or raising equity. The reason I bring up the Peter Pan article is this is called unbundling venture capital via DAOs. And I think this used to be called unbundling the unit economics of DAOs. And the reason I like it is because I look at NFT collections as pretty much synonymous with DAOs. So if you and I talk about the unbundling of venture DAO mechanics and how the functions are changing and pretty much the standard operating procedures, I think we can extend those same theories to NFT collections as well. They're simply decentralized communities. They're DAOs, so we can have similar context. So this is probably the best one that comes to mind, Anthony, to answer your question of, is there a good article covering business models? They talk about capital itself being abundant, while valuable services are not. And anybody in crypto can understand and can lament with me that money is becoming increasingly bullshit. So it's a fresh hot take, and we may need one or two generations to pass on before humanity has a consciousness shift to, or a complete consciousness shift to, money is increasingly BS. So capital itself is abundant. Valuable services, they saying, are not. The rise of investment DAOs, we're already seeing investment DAOs being created. This is more on the DAO side, investing as a decentralized community and becoming pretty much a decentralized venture capital firm, while not being a professional firm, just being a group of individuals. They also talk about the investment DAO landscape. So this is getting a little bit further away from NFTs. We've got incubation DAOs, and this we can tie over to NFT collections. A lot of NFT collections, especially the CC0 NFT collections. CC0 licensing is where you put your IP, your intellectual property for your NFTs, into the public domain, and then anybody can commercially use that intellectual property and profit from it. So you're giving away your IP if you CC0 your collection. So in terms of incubation DAOs, if you're an NFT collection that's raised money, that wants to build a community, oftentimes you want to incubate your community to then build around it. So, your best NFT collections like Nouns DAO. Nouns DAO has a bunch of other non-core team members building little products and services for the Nouns community. So we can definitely take that concept of incubation DAOs and tie that over to NFT collections, pretty much incubating their own metaverse. Yuga Labs has incubated their own metaverse in many ways. Yeah, we've got the rise of service DAOs coming up. So I could certainly extend that over to NFT collections. And, rather than, tokens, well, we had NFT collections, and then giving tokens to NFT collections was a craze, and still is a craze, with, Cool Cats getting the cool token. Bored Ape Yacht Club getting the Ape Coin. There's quite a few other examples. CyberKong's getting the Banana Token. Well, we've had a bit of a switch in popularity to membership NFTs and pass NFTs, where you get a pass and you get to join a community, join a membership. We've got BFF. We've got all the famous ones like Friends with Benefits and Pleaser DAO and others. So the rise of service DAOs are coming, and I could see that extending to NFT business models. Let's use NFTs or tokens as the ownership or the membership structure for a given community. And then also let's build, services on top of that. And that's where I think DAOs are really lacking. If we talk about service DAOs, we have to talk about incentivization structures. And that is super, super difficult at the moment for decentralized communities. How do I get you to do a piece of work for me, commit hours of your life to the project, and I'm going to compensate you fairly, and then you're going to come back and do it again for me, next week, in some sort of part-time work capacity. So incentivization is just a massive, massive discussion. We've been talking about the ownership of DAOs and NFT collections and how they compare to equity. And I think this may be more related to funds. So I won't get into the dilution because that's more related to funds. But this is definitely very much related to us. So instead of saying DAO, just say we'll scratch this out and we'll just say NFT collection. So we're comparing an equity company to an NFT collection. Equity company incorporates, sets up a bank account. In the United States, you're going through Delaware and you're creating a Delaware C Corp and you're getting 10 million shares to issue out to your initial investors and your initial employees. Interview process, NDAs, contract negotiations, stock option contracts. Well, for DAOs and for NFT collections, a lot of those middlemen services go away. We have Gnosis Safe as our treasury and as our bank account, which is typically a multi-signature account. We've got Snapshot for voting. So if we wanted to have voting consensus, we would write proposals. What they don't mention here is proposals. If you're a good writer out there and you want to get into Web3, become a proposal writer, because that is an art form, it seems like. Grant writers, proposal writers. There's a lot of discussion that happens before snapshot votes are taking place. And then after, we've got token contract deployment. Related to onboarding of contributors, we have open source opportunities to contribute via programmatic rewards. And this phrase right here goes back to my point on incentivization being ridiculously difficult at the moment. I think we're all waiting, at least I'm waiting, for programmatic rewards. And I really love that phrase and why they used it here, how they used it. Because that's really what we're wanting. I want to be able to log into my decentralized community, know what the community needs and our biggest action items, know how much I'm going to get paid for it, and then just do it. And then just know that I'm going to get programmatic rewards if I meet these characteristics. And it looks like humanity is still figuring it out. What are the best practices and gold standards for programmatic rewards? Yep, and then helping early stage teams bootstrap token networks. That's a bit more venture related, but wanted to quickly mention this one. It's a decent comparison to NFT collections when we're discussing business models. Great question, Anthony, and I'll try to think about some more. Moonbirds, it seems like, Anthony, were the first collection that was pretty unapologetic that they were raising funds to start a business. They were kind of like, "Yep, this is our fundraising round. Like, welcome, come be a part owner. We're not scared of the security title." So, be interesting to see how those go. And it looks like we've got a few scammers in there. We've got someone posing as Collective Shift, so please do not click that one. And we've also got someone posing as Yabara. So it looks like we've got a few scammers in the comments, so beware of them. And then is there an article on DeFis in NFTs? In a DeFi ecology? Good question. Related to NFTs in DeFi, take a look at NFT lending articles that you can find. Most of them at the moment are related to NFT lending. Could probably potentially find one quickly if I just searched in NFT lending. This is talking about your NFTXs of the world, your NFT-Fi of the world, your floor DAOs, and also there's a company called JPEG, or a project called JPEG as well. So I won't go searching too long. Don't want to go. But, these are the type of things people are talking about. Last month, an NFT collector used 101 punks to collateralize an $8 million loan. That's good utility. So NFT lending is certainly changing the game for blue chip collections at the moment. And here's the follows. JPEG 69. I'll put this one in the thread actually for you, Anthony. This is actually pretty good. We did decently well here finding a new one. Finding a thread here on the fly. There we go. Our list of 26 NFT lending protocols. Didn't know we had that many. So it's probably your best bet right there, Anthony. Go to Yash. Thank you, Yash, with a YB effect. Now, quickly running back to DeFi Llama. I saw we had a new Wikipedia page here. We're coming into almost time. Please let me know. We got about 11 people on here. Hello, everyone. Let me know if you want to talk about something before we hop off. I'm going to hop off in about 10 minutes. Oh, excuse me. This Wikipedia page literally took me to a Wikipedia page for DeFi Llama. We are talking about the state of the market today because of the crazy price change in crypto prices. To kind of sum, will this be live? Yes, I believe, Anthony, this will be available later, so I can post this somewhere, certainly on the collectiveshift.io platform as well. So we've had some wild price performance. We're down 20% over the last 7 days, down about 10 or 12% for both Bitcoin and Ethereum, and also the market at a whole. We're about 1.7 trillion yesterday, and we've dropped down to about 1.5 trillion today. Some silver linings that we talked about. DEX metrics have been consistent for nearly 12 months at over 50 billion traded per month. So we've created a foundation of decentralized exchanges and decentralized finance usage by a small subset of users. We also saw that OpenSea has demonstrated consistent trading volume monthly for about 9 months. So we've had over 2 billion in trading volume for OpenSea for the last 12 months. So we're creating some foundational services that don't look like they're going away. Probably the biggest thing that I'm concerned about is if we go back to DeFi Llama, just the amount of assets on chain. We've seen a pretty hefty drop in total value, in total assets on chain over the last 7 days. Pretty much a 20% decrease, I'd say, over in total value locked on chain. Ethereum's got about nearly less than about 100 billion, and the rest also probably have 100 billion combined. And let's see if yields have gone. I will say that I believe I know yesterday on synthetics, the staking APY for synthetics on Optimism was over at like 100%. So I think potentially some DeFi 1.0 yields for non-stablecoin assets that are trusted. I think yields might have gone through the roof due to due to the market effects. Now, there's a pretty cool page as well. Having a look at state of the markets. If we go to the top protocols page on DeFi Llama, we've got our blockchain in the first column, and then we've got our leading applications and projects for all of our different service types up here in the top row. DEXs, liquid staking, CDPs, or collateralized debt positions, yield, lending. So pretty much all of our different types of DeFi applications. And that's probably where we'll end off today. If we have a look at our price performance, we'll have a look at just since 2019, we've had just some really, really wonderful performance. And actually, if I go to TradingView, I really like their macro page. If I go to charts, give me 1 second. Oops. if we have a look at all of cryptocurrencies, here we are. This is the page I love. We've just had some really, really wonderful gains. We discussed at the start of the call that, total crypto market cap went from roughly 200 billion to over 3 trillion over the last, 18 to 24 months. So we also discussed really quickly that Bitcoin has only spent about 17 to 20 days between the $20,000 and $30,000 price range, indicating to me that it needs to spend a bit more time there. And we're kind of not at the bottom of this massive, massive decrease since, the start of April. We've been decreasing as a market since November, since the all-time highs. We dropped down to mid-March. From mid-March to early April, we had a bit of a run, but total crypto market cap has just fallen off a cliff since then. So HODL on DeFi market cap is reacting similarly. Really, really not looking very good at all. And then quickly, before we end, let's check out total market capitalization dominance. Dominance has stayed pretty flat. Ever since May of 2021, we got down to about 42% in BTC dominance. We've pretty much stayed flat since then. So Bitcoin's still dominating as much as it should. Ethereum's dominant is slowly continuing to climb. Back at the start of 2021, we were down at about 13% in dominance, and we're up to 19%. So Ethereum increasingly showing why, Ethereum's market capitalization dominance is in line with its impact on the market, I guess I should say. That's probably where we'll end today. So like I said, I think the stock to flow chart still looks pretty good to me. Looks like we're setting up for another 4-year cycle. Isn't that right, Anthony? If we have a look now, if I go back to CoinGecko, when you say Bitcoin's at 594 billion and you say that, Ethereum's at 283 billion, it's like, okay, the flipping is definitely coming soon. And soon, as in, hopefully potentially the next cycle. But it's just, I don't know if these two have ever been this close. So, 300 billion to 600 billion. The flipping appears to be getting closer. Yes, for sure. And it makes sense. Ethereum can house far more commerce than Bitcoin can as a blockchain. So it does make sense. So me personally, I'm hodling on. And to me, this was just another fascinating week in the world of crypto. Yes, my portfolio got smaller like the rest of crypto. But, we started tracking, this at the middle point of the last bear market. So we've seen one cycle happen. Looks like we're at the start of a new bear market. So I'm pretty much I'm pretty much waiting till, July, August, September to see what price performance is around there for then me to make a decision to invest, or whether I wait for November, December, potentially early next year. So while it's not the greatest answer, we are in a generational, movement into the digital age. So, you can't be bearish for too long, because we're literally in a generational movement to become increasingly more digital as a species. So we won't be bearish for too long, but it could be a quieter year for us. And I'm really looking forward to seeing what price performance does in, August, September, October. But unfortunately, we have to wait to get there. So fascinating week. We've got the USDT, the UST Terra USD debacle going on right now. It's only at 91 cents compared to its dollar peg. And then we've also got the Azuki drama as well, with their founder actually being the founder of 3 Rugs in the past. So never a dull day. I agree with you, Anthony. Bitcoin's done its job. It will always do its job. Ooh, actually, I don't agree with you. I'm sorry, Anthony. But it won't be 1 million. I do think it'll be 1 million, but we will have to wait probably 5 to 10 years. So it'll be late 2020s, in my opinion, when that thing hits 1 million. But I think it will. But it's continuing to do its job as a store of value and as a payment service, or as a payment structure or instrument. And really quickly before we end, for those that didn't get my spiel at the start, we have some wonderful services over at collectiveshift.io. We have 3 different portfolios that we run. We invest our own ETH from the company's treasury. We have an NFT portfolio, probably one of the only ones in the industry. We buy live NFTs. We've got about 6, 7, 8 NFTs in there, so you can track along and follow what we do. We also have a long-term growth portfolio, an early stage growth opportunities portfolio, 3 different portfolios that are not mock portfolios. They are real live portfolios that we've put ETH into. We've also got a really great assets page where we've taken API information from CoinGecko and pulled in a bunch of good analysis. Here is what the asset, let me click into the BTC asset page. I want to create one of these for NFT collections. So I'm strategizing around that to pull API information so we can tell you a consistent history for every NFT collection, and it all looks the same. And then here's the BTC page. We got a chart. We've got all our research, and then the best thing is bullish and bearish here down the bottom. And lastly, we have a wonderful airdrops page that's been pretty helpful so far. We hit a home run with Optimism. Optimism was on here for our blockchains, and I am going to increase the Arbitrum strategy here kind of this week, actually, because we've got some information that Arbitrum might be releasing a token. If not today, if not tomorrow, soon. I know they're releasing NFTs, so I think the game is, I got to look this up a little bit more, is we got to earn Arbitrum NFTs, and then that will hopefully get us an airdrop. So we've got a wonderful airdrop page here. This thing is static because airdrop strategies don't change too often. They change, every month or so. We'll change our airdrop strategy, but this is foundational stuff here: blockchains, wallets, bridges, DeFi, NFTs. So many airdrop opportunities. I always like to tell people, TradFi and traditional businesses are valued on their present value of future cash flows. If you talk about equity or stocks, they talk about present value of future cash flows. When I look at NFT investments and I look at, DeFi investments, or actually mostly NFT investments, I'm looking at the future value, or the present value of future token flow. So I think that's a phrase we'll see more and more of. That present value theory, time value of money's not changing from TradFi to Web3. So instead of cash flow, it's going to be token flow. So that's about it for today. Thanks, everyone. We had a good time here, just getting a state of the market, bit of office hours. Thank you, Anthony, for the questions related to business models for NFT collections. NFT collections are a new way to raise capital for the entrepreneur. Instead of raising a Series Seed, a Series A, and having the VC or venture capitalist take 10 to 20% of your business, or taking debt from family and friends, new entrepreneurs are raising money through NFT collections. So we're going to see more and more of this, in my opinion. I think it's a great mechanism. Artists are getting increasingly more power. So yeah, that's probably about it, to be honest. Really happy the artists are getting more power. It seems like within the NFT space, they command a seat at the table when you're doing business strategy. If you were at a traditional tech startup, your product designer or your artist probably didn't get a seat at the table with the executives. Now they do, for sure. There's just a really high bar for artwork design in the NFT space. And I don't blame it. This is my last rant. But if you're someone from the Fortnite generation or the Minecraft generation, and you're under 20, my expectations for a digital experience when it comes to virtual worlds and 3D worlds is pretty darn high. The artwork better be legit, the user experience better be amazing, and the game better be good. There better not be bugs. So if you're a younger generation, your expectations are much higher than mine, and even my generation, the millennials, and then also way more than the baby boomers. So that's probably where we'll end off today. Thank you, everyone. Really appreciate it. Love these kind of impromptu live streams. I'll put this up on the platform, and we'll be back at this, doing this again some other time. Thank you, everyone. Bye for now.